Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hello, good morning everyone, and welcome to London Session Open. Hope you had a great weekend and a great trading week as well last week. Unfortunately, we are still in the government shutdown. The US government is still shut down. So many of the economic data and economic data releases got postponed. Most importantly, we're talking about the unemployment rates and the NFP. We're hoping that we might be getting a what's it called, like a reopen for the government soon. But I think we're like 9 days away from the Fed interest rate decision, which the markets are now pricing a 97% chance of a rate cut. So I think they will not open or reopen the government before like the beginning of next month. Because I don't know, I believe that this was done on purpose. They wanted to black out the data so that the Fed will not have any reason but to follow their projection, which was cutting 50 basis points by the end of this year. So now we're heading towards the 29th of October, the interest rate decision from the Fed, and we are expecting to see a 25 basis point cut on 29th of October. So let's get to it. Let's go see the economic calendar. Today, I believe it will be more technical than fundamental because we don't have much to talk about in terms of the calendar. So let's get to it. Okay, so today the only high impact data point is the GDP from China. The previous reading was 5.2%. The forecast is 4.7%. And we're expecting to see like a growth in the Chinese economy. Now, let me tell you something. If you take a look at if you want to compare Chinese economy with the US economy, China's economy is also very, very big. So when you say like the last quarter, it was like 5.2% growth, that's huge. And even the forecast is less than the previous, which is 4.7. But 4.7 out of like trillions of dollars worth of an economy is way too much. So if you compare it to the US, we're seeing like 3%, 2.5%, 2.8%. So if the Chinese, what's worth mentioning here is that if the Chinese economy keeps growing at this pace, it will outgrow the US economy by a matter of like 10 years. Okay, so that's that. Let me just go check if you have any questions. Okay. Okay, some people want me to start talking about the charts. Okay, we will do that. We have a question if there is going to be CPI release if the US government are still shut down. Okay, if the government is still shut down, no, we will not have the CPI this week. It is set to be on Friday. And so if they're still like shut down, they're going to pull that out of the economic calendar as well. Okay, let's move to Wednesday. Tuesday, we don't have anything. We have Wednesday, we have the CPI coming from UK. The previous reading was 3.8%, which is a bit too high because the target is at 2%. The forecast is 4%. This one is not updated yet, but the forecast is 4%. So they're expecting to get an increasing CPI or inflation. So if this comes higher than the previous and the forecast, this could be very positive for the GBP against the USD, because it means that they will keep rates higher for longer. And then we have the crude oil inventories. Okay, so the previous reading was at 3.524, so that's in positive. So there was what's called, we have a surplus in inventory, which means that the demand is not matching the supply, and that's bearish for the oil prices. Okay, now let's move to the next one, which is Thursday. Okay, so we have initial jobless claims. The previous reading was 218,000. The forecast is 223,000, which is an increase, which is more rate cut friendly, because it means that more people are claiming to be jobless. So if the actual came in higher, that would boost the rate cut odds by the Fed. If it comes in lower, that would lower the odds, but I think it's already priced in that the markets are expecting 25 basis point cut by October 29th. And we have the existing home sales on Thursday. So the previous reading was 4 million. The expected or the forecast is 4.06. So no big deal around this one, because like even the expected is not very much higher than the previous. So if the actual comes in higher than the forecast and the previous, we will see like this is a healthy sign that people are exchanging houses. So people are buying houses, which means the economy is still healthy and it's still moving. And that's it for Thursday. Let me check if we have anything. Okay, buy Bitcoin. We'll see if we will buy Bitcoin. Okay. And Friday, of course, we have the CPI numbers from the US. If the government shutdown persists, we're going to see all of these disappear from the economic calendar. The core CPI is expected to be 0.3%. That's month on month, in comparison with the previous, which is no change, 0.3%. So if the actual came in higher than expected, that would mean that the Fed will need to keep rates higher, and that would hurt their expectations of cutting a 25 basis point in October 29th. The CPI is 2.9%. The previous was 2.9%. The expected is 3.1%, and if the actual comes in higher than higher than 3% or higher than 3.1%, that would be very bullish for the dollar, because it means they will not cut rates. Okay. But again, if the government shutdown persists, we're going to see all of this disappear, and they're going to cut anyway. Now we go on the CPI. You know, the most important number between all these three, we have the core CPI, we already discussed it, and we have the CPI year on year or year over year. So 2.9, forecast 3.1, and the actual is if it comes higher than the previous and the forecast, we're going to see bullishness on the US dollar. And then we have the S&P Global Manufacturing PMI. So the previous reading was 52. The expected is going to be 51.9. So if it comes in higher, that would be a good sign for the manufacturing sector. And anyway, it's above 50. So the PMI numbers, if we are above 50, it shows expansion. If it's below 50, it shows contraction. So even the forecast is 51.9, which is also considered an expansion. Now, the services sector, PMI is the previous reading was 54.2 and the expected is 53.5. So it's expected to like drop slightly, but still above 50, as I told you. So it's still in the expansion territory. And new home sales, we don't have a forecasted number yet, but the previous number was 800,000 units. So if that increases, that shows that the economy is growing and moving. So all good, and that's a healthy sign for the US economy. That's it for the economic calendar. Now, I think it's time to move to the charts, and let me see what you guys have questions, if you have any questions. Gold bearish, we'll see in a bit. Yeah, all good. So, okay, 1 second. Let me start by going to the charts. We go to start the weekly as always, and now I'm going to share my screen. 1 second. Okay. For some reason, unable to share screen. What's happening? Yeah, there it is. Let me just check if everything, yeah. Now I'm sharing my screen. So, okay, moving to the charts. The DXY, which is the dollar index, is expected to start reversing from this area, but we still don't have enough confirmations. But if we look at the weekly time frame, we could see that there was a rejection from this area, which was the overall major uptrend. Okay, so if you take a look, we've been in that uptrend for the past, I don't know, maybe 17 years, 18 years. So now we hit that trend line, that major trend line, and that's where the top-down analysis importance comes from. You need to see the big picture. Otherwise, you'll be looking at dollar and saying, yeah, it's going down, I'm going to keep selling. But because we look at the big picture, we saw that it just got rejected from the major trend line. So that's that. Last week it closed. We saw like a slightly bearish candle, but it wasn't like an invalidating candle. So for the past 4 weeks, it's been going great. Last week there was some indecisiveness, and this week, if it breaks above the 100 point mark, we're going to see it run to the 103 points. Excuse me 1 second, please. Okay. Oh, okay. The camera's off. 1 second. Apologies for that. We'll move to another camera. No problem. All good? Okay. So what did I want to say? Okay. Back to the charts. So that's for the weekly. We go to the daily. Okay, so what do we have on the daily time frame? Let's see. We're starting to see higher highs, higher lows, and we close above the 126-day moving average. So I believe like we're still good. We're going to see a break above the 100 mark. So what does that mean for the market, guys? It means that if that happens and we break above the 100 mark, the whole market will start dropping. We're talking euro, we're talking GBP, we're talking JPY, and we were talking gold and silver as well. So let's see how that goes. But for now, it's still bullish to me, or it's showing bullishness, the US dollar. Look, and we have the 200-day moving average, and we have the 126-day moving average. The price is above them, and we saw a beautiful engulfing candle on that level. Okay, so let's move to the next one, which is euro. As always, we start with the weekly. How did it close the past week? Yeah, we saw, like, I have a theory about euro that will be dropping all the way down here. But we are still waiting for confirmations. But anyway, it's been dropping for the past like 3-4 weeks. This week, like, it broke down and then closed above this important level of 1.1620. Now, if it breaks below that level again, we're going to see it drop really bad, and I'm expecting like a large drop in the Euro USD. But we still need confirmation. We still need to close below this level, because as you saw, it got here, it got rejected from the moving average. If it closed below, that would have been a different story, but it got rejected from it, and we're going higher and higher. Now, let's wait and see what the euro would do. It tried to like climb higher, and it reached 1.1730 almost on Friday, but it got rejected and closed near the 1.1650. So that's a bearish sign. And just as we said about the US dollar, the euro is the exact opposite. So we got rejected, and we were expecting to see more downside on the euro. So that's for yeah. And even on the 4 hours, we're still trending down, lower highs, lower lows. No reason for me to think of buys on euro. So that's euro, and let's move to the GBP, the cable, Great Britain pound. Okay, let me check if you have any questions. Do you have any questions? No, not really. So, okay, we'll move to the charts again. Okay, so we have the GBP USD on the weekly time frame. Now, this one looks a little bit different than euro, because it's somehow consolidating in that, like, it's ranging in this area. So I wouldn't be interested to buy or sell the British pound. However, it looks more bullish to me than bearish, to be honest. So, like, even if we draw a trend line here, we broke below the trend line. Let's see the daily, maybe. Okay, so we had this break and retest from beyond the trend line. And we have this moving average and like small trend line, 1, 2, 3, but I need to see it break below this level, which is 1.3150. If it breaks below and closes below, then I might be interested to short. But before that, we have a good way to go. Like, we have 1.34 to 1.32. We have like a good range to trade. On the daily, it shows that you have like a possibility for a downside on the GBP USD, which confirms the analysis on the Euro USD and the DXY. All right, now let's go to the USD JPY. Okay, so the USD JPY is mainly gaining the USD JPY as a pair. We're not talking about the yen. The USD JPY is gaining its strength mainly because of the DXY rejection. We saw this rejection, like this coincided with the rejection of the DXY. So if the DXY continues going up and continues climbing above the 100 point mark that we just mentioned, the USD JPY will continue going up from there, I believe. And the next level we have is 158. Okay. The price is above both moving averages. It broke above this very important resistance level and it closed above it like for more than a couple of days and the weekend. So I believe we're seeing just a retest now, and we're going to continue going higher. Let me check. 4 hours. Yeah, 4 hours shows the same. We are still above moving averages, and the 100 moving average, 100-day moving average is above the 200-day moving average, which is like a bullish sign. All right. Okay. And that's for the USD JPY. Now let's move to everyone's favorite, gold. Let's see what's happening in gold. Okay, so the previous week closed super bullish. It's above all moving averages, above the bands that I mentioned several times before. So on the weekly, it shows like a very bullish behavior. Now on the daily, we might be seeing a retracement towards the 4,150, 4,140, but we might not be seeing any of that, and like we just like continue going up from here. So let's go to lower time frames to check for that. Yeah, so now we're like we're seeing a reaction from the lower band, which means it's respecting the uptrend still. We cannot say anything about. Sorry. So we cannot say anything about any sells yet. Maybe for those who sold like up here and took profit around this area, yeah. But now we need to analyze it a bit more before we decide if it's going up or down. But the overall trend is like an uptrend, so I prefer just sticking with the trend. The 4 hours looks a little bit bearish, a little bit, but still like the maximum it could do for now is, so yeah, we could reach the 4,280 area, and then we'll see a reaction from there, or we'll just continue going up. So let me draw it for you so that it'll make more sense. Either we do this, then this, or we do this, then this, then this. Okay, so one of two scenarios. Let me change the color so you can guys see. So we have one of two scenarios. One of them is to continue dropping towards the 4,140, or we see like a breakout of this zone to around 350, then retest around 285, and then we see it going and breaking new all-time highs. Like, does this really make sense to me? It does. Let me check what's happening on the slower time frame. Yeah, it absolutely makes sense, because like dropping to 140 makes sense, and climbing to a new all-time high also makes sense, because we're like in such a place that if we break below this area, we're going to keep going down. If we break above and close above a certain like price like 280, we're going to see it climbing above. Now let's go to lower time frames. Maybe we'll get more clues. Okay. Yeah, it's retesting the trend line from beyond. So yeah, this looks quite bearish to me, to be honest. But I still need to see confirmations. Let's go down to 30 minutes. Yeah. Now see, here's the thing. On the 30-minute time frame, let's look at the behavior. Whenever it reaches this level, which is the 200-day moving average, we're seeing reversal patterns like engulfing candle, engulfing candle, engulfing candle. We're seeing many engulfing candles. But is that enough? Not really, no. We need to see it break above the 277, and then we have a continuation to the upside. But if you want to ask me about my opinion, I would buy gold. I would not sell gold because the uptrend that we are in is crazy. So I'd rather be on the side of the trend instead of just trying to fight it and go against it, because I know as much as it could be tempting to short gold because like it went a long way. So as much as it might be tempting, but I know better than shorting gold when it's in a huge uptrend like the one we're seeing these days. Let me see if you guys have any questions. Yeah, a sell does make sense, but I'm answering Moyo. A sell does make sense, but for me, I wouldn't sell gold because for the reasons I just mentioned. It's very, very bullish, and we're in a very impulsive move. And looking back at the weekly and the daily, it's very bullish. So, like, we don't want to be looking at lower time frames and fall for the trap of contradiction confusion. Like we're seeing a reversal pattern on 1 hour, and the higher time frames are showing us bullishness. So we go with the lower time frame. No, the bigger time frames and the higher time frames usually serve us better and like help us avoid mistakes. Can you show us one of your previous trades? You can go back to the live streams and see, like, we had many trades in the past. But the thing is that I delete them. I don't keep them here. Unless you want me to show you my journal, which I don't mind, but this is not the platform for it. Waiting to, okay, to buy gold. Okay, yeah, that would be like a very smart thing to do, Bibik. Bibik is saying like they're waiting for 4,140 to buy gold. That would be a very smart thing to do, but it might never go there, or not never. I mean, like during this session or tomorrow or this week, it might be going up and we'll not see the 140. But waiting to buy at 4,140 is much smarter than trying to sell now, targeting 4,140. Does a short sell make sense on USD JPY? Let me check. Before answering. Let me like take another look, because like, you know what, on lower time frames we have a nice downtrend. Like, look, it's a nice downtrend. So if you want to sell, I would sell around the 151 or like this area, with my stops like above here, not more than that. I wouldn't risk more than 40 pips, 50 pips on this trade to target 150, for example. Okay, so a 1 to 2, 1 to 3 should make sense, yeah, if you're asking from this perspective. On the hourly, like, let me see. Okay, the problem is on the hourly, you can clearly see that there's a positive divergence. So this divergence between, look, the price is making lower lows, but the MACD is actually making higher lows. So this could be like a rejection to the upside. But to answer your question, the sell, like, mathematically makes more sense. Yeah, mathematically the sell makes more sense. But do I see it going down? Not sure, because of many reasons. One of them is the DXY. I see it going up. I see the euro going down, which supports a buy on the USD JPY instead of a sell. But mathematically, yes, the sell does make more sense than the buy. Let me go back to the chat and check support and resistance. Very nice. What about? Okay, what about 4,180? 4,180 is a very good level, by the way, as well. It's a Fibonacci level as well, so you could do that. But for me, even if I'm buying at 4,180, 4,140, whatever the number is, I'd wait for a setup. So if I see my setup around that area, yeah, of course. Like, just to put things into perspective. Now, we know the levels. We know that 4,180, 4,140, 3,900, 4,000, all of these are the levels. We know the levels, right? So our job as traders is we need to find setups, or the setups that we have already back tested, and we know that they work. We need to find our setups on that like in that same area, so that we can have an edge over the market, or increase the odds of getting a profit from the market. So whatever the price is, I would say just wait for your setup. Okay. Okay, if gold reaches 290, then retest, reject with good candle, then we will go long. Till then, I will wait on gold. Yeah, that's also smart. Yeah. You know what? I see a big shift in the mindset on the chat since we started. You guys are becoming much smarter and much wiser, which is something I love. Tradin TV was actually a good project, so I'm grateful for that. Okay, 4,180 is also around. Yes, sir. You are welcome. So, guys, 2 more minutes. Do you have any questions for me? Do you have any questions for me before we close? You know what we missed? Before the questions, let's go see the NASDAQ. I believe the NASDAQ is doing something. Okay, we go to the weekly. How's the weekly doing? Last week was closed bullish. I see it still going up on the weekly. We go to the daily. We're still in an uptrend. Look like the 50-day moving average is still holding up pretty well. And if you look here, we can see a very clear trend line. So, and with 1, 2, 3, 4, 5, 6, 7, 8 retests, and the price still respects that trend line, which could be replaced with this moving average. But just to show you, so although we had a very sharp drop here, but that doesn't mean anything. As long as we're above the trend line, the trend remains our friend. We do not chase shorts in an uptrend. All right, the 4 hours still very bullish. Okay, that was because of something Trump did, I'm sure, and then forgot it was last week. So anyway, but it got rejected from that area, which is trend line area, and we saw a break above this. You know what? We still the final confirmation I want is to break above the 25,000 point level. That would be a great confirmation. Okay, and then we start we connect this, and we have a slower or a flatter trend. All right. Let's see. Do you have any questions? You know about ICT. ICT is good or bad, in my opinion. Okay. Now, ICT is just a method, or it's just like a set of rules. You can call it a strategy, whatever you want. But for me, as a trader, my job is not to be like saying what works and what does not. You can do whatever you want. You can do ICT and it does work. You can do SMC. You can do technical, like classic technical analysis. You can do harmonics. You can do whatever you want. All of them work. That is not the most important thing. In trading success, you need three things. You need a proper method that is actually proven to work. So if you trade, like if you make 10 trades using ICT and it works like 6 times out of 10, then yeah, it works. Then you can actually rely on that. The second thing in the triangle of success is your risk management, because without risk management, you'll be all over the place emotionally. Which brings us to the third one, which is emotional stability during trading. So you need a proper method, you need good planning and good risk management, and of course, good emotional stability. Otherwise, you'll be all over the place, and like doesn't matter whatever you use, even if you're using the best method ever, even if you have the best edge ever in the markets, you will end up losing if you don't have all three of these. Okay. This is a very good plan. Okay, someone is asking, did I leave the prop firm and join funding pips, or I work for both? I was never in a prop firm, my friend. I trade my personal money. I don't trade prop firms. For reasons I mentioned before, which is like I'm a swing trader, and the prop firms are more like they're more focused towards day traders and scalpers than people who trade like me. So it would take me like maybe a month to pass a challenge, which because my trades are that long. So yeah, it's not the most feasible thing for me to do. That's why I trade on brokers. Will there be a CPI release this week? As I said in the beginning, if the government shutdown persists, no, they will pull it out of the calendar. Do we have any more questions? Any more questions? So to answer the second ICT, the guy who asked about ICT, ICT is good, but it's not enough. You need to have proper risk management and proper mental clarity and emotional stability. Yeah, I think we're good. So okay, guys, it was a pleasure talking to you again and breaking down the market with you guys. I hope you have a productive week, a profitable week. If you have any questions, do not hesitate to reach out for the team and for me. You know where to find me on Instagram, on Twitter, wherever you want. As always, trade responsibly. Always use stops. Trading without a stop is trading without a method. I hope you have a great week ahead. Take care of yourselves. Bye-bye.